Good morning, traders. It is February 3rd, 2022, just before 8 a.m., and this is my pre-market outlook and technical analysis for day trading the SPY. Coming into today, I'm not sure if everyone got the analysis. We had a little difficulty. Internet was out for a while yesterday morning. But just a quick review. I called out the 457 area as an area, as a great short for the day. Now, the reason for that was that I recognize that there is a great amount of overhead supply. I expect a lot of back and forth over the next couple of weeks due to this overhead supply. And basically what overhead supply is, it's where a lot of positions were or still are, and the price is sitting below that level of a lot of those position holders. And each time we get close, those position holders proceed to dump or sell those positions to get out of it. Each time price, gets near that area. So we could fall through an air pocket today, find support, and then try to go back up sooner or later to that place of overhead supply. And as we get deeper and deeper, or more and more orders are being sold, we could push just a little bit further up into that area overhead supply as people continue to dump positions. So that's what is taking place right now. So we're at a level where at some point I'm going to consider building a large amount of positions, not for this week, not for next week, but this is something that I want to be in for going into March. So that's something to consider. Now, another thing that's having a big impact on the market is Facebook. Facebook came out with earnings, and it took a nice tumble. All right, as you can see, I brought the chart up of Facebook. You can see after hours, it took a really nice tumble. The thing to consider for today, it took such a nice tumble overnight, or using my analogies, it ran so far, so fast that it's out of breath, and it's going to need a moment to catch its breath, which is basically consolidation. So right now I see Facebook consolidating for a while, not falling much further below the 272, 250 area. And actually, let me look a little closer at this. It might be a little more than 250. All right, correction. We're just going to leave it at between 250 and the 230s, possibly 235 area on Facebook. We should see consolidation for a while, at least until the next big earnings, and that's probably going to be this evening, which is Amazon. So Amazon could either push us back up just below overhead supply, or I'm actually looking for the run-up or anticipation before earnings of Facebook to kind of push us back up toward that overhead supply area at 457. Or it could send us reeling back to test some temporary lows. So that's where we are today, things that are impacting the market. Let's get to key levels for today. All right, here we go with the key levels of the day, starting with resistance. The jack resistance is going to be 453 to 454 area. Queen resistance is going to be the 455 through 456 area. King resistance is going to be 457 through 460 area. On the support side, we have the jack support at 450 through 449 area. Queen support at 448 through 447 area, and king support at 446 through 443 area. I get a lot of questions about the jack, king, or queen names when it comes to the support and resistance areas. It's just the easy way to rank the areas that if we break through the jack resistance, then we know that the next decision area or area of importance when it comes to resistance is going to be the queen resistance area. That's all it is. It's nothing special. It's just a way to kind of rank the support and resistance areas that I have for the day. All right. Going into today, the main thesis is bearish, meaning we could close below the 457.35 area. Alternate thesis is bullish, closing above the 457.35 area. The current channel we are in, if you watched yesterday, I told you we peaked up into the upper channel, and I said we wouldn't be there for long. And now we're back down in the channel below. That's that 453 through 425 channel. I'm going to place a lot of importance. This 449, 448 area is going to be very pivotal. This is going to be an area where I look for a reversal at some point to where we could take off to go back and retest that overhead supply area. So those are the things today. So the next part, let's get into the scenarios for today, how things may play out and how they may look on the chart. All right, the first scenario that we'll be looking at that's highly probable for today is going to be the range day structure. We could look to set a decision area or high boundary around the jack or queen resistance area before chopping lower, then possibly trying to push boundaries higher again before fading, and then eventually taking off and going up and working our way back up toward that overhead supply area. That is the range day structure. The next scenario is going to be the rounded reversal day, or what I like to call a range day. We could get a continued takeoff toward the queen resistance area, possibly the king area, before reaching this midday chop, and then the second half of the day we spend that same energy that we had coming up. We use that same type of energy going down. So this is basically a rounded reversal day. Going up, midday chop, coming down. As always, the key part to looking at a range or rounded reversal day is recognizing two things: the continued takeoff like a rocket, and then the divergences. Divergences on volume after the first couple of intraday candles, and then divergence on internals or your indicator. As price action is moving up, you should see your indicator in a slight downtrend as price action is moving up. So that is scenario number 2, the rounded reversal. Now, the third scenario is what we're going to call a trend day down. We open gap down and start a small relief rally. The key thing on a trend day down, or any trend day, is that we open up with a gap, a decent sized gap. And right here, this is the previous close at 457.35. Now, what is often to happen is that we usually try to close that gap, and anywhere between where we open and the previous close is where we could find resistance and roll over. And when we roll over, we enter the main trend of the day, which is going to be down. However, on days like this, where the gap is so large, we could actually go into the midday feeling like a range day. And what I mean by that, since the gap is so large, we could take a lot of time trying to get back up here before we eventually dump it over again. Or not even quite dump it over, but hang out somewhere here for a good portion of the day and come into tomorrow for the rest of the dump. But the gap is so large that it could take us all day to try to fight back up toward that place where we could eventually find that reversal. So be aware and be careful of that as we get into these ultra volatile days. The day structure really can become skewed because of the volatility and the huge distances that, or ranges that, price action may span over. So that is it for today. As always, please define and know your risk. Profit will follow. As always, wishing you a profitable trading day. Have a great one.